What is going on, Future Focus family? My name is George, and we talk about investing on this channel. We talk about stocks, crypto, real estate, basically anything that you can put your money into that's going to bring you more money back in the future. Now, a lot of stuff is going on that's crazy. Stocks are down, crypto is down. The real estate market is going bananas as well because rates are at all-time highs. Well, not all time, but the highest in 2 years. So as we're talking right now, pre-market, the S&P futures are down 0.42%. The Dow futures are down 0.22%. We got the NASDAQ futures that are down 0.72%. And we're going to focus on the NASDAQ a little bit today. The Russell 2000, which is the smallest 2,000 companies in the stock market, are down 0.30. You have crude oil down from all-time highs, down 0.62. Gold and silver are not doing what they're supposed to be doing. I wish Matt was on here with me so we could speak a little bit on that. Those are down as well. And as you know, crypto is down. So you have the CMC index that is back down under 1,000. It's currently at 906. As of today, it's down 8.87%. And Bitcoin itself, tethered to the US dollar, is down $38,589. So today we're going to talk about why this is going on. I'm going to go through a few articles, and then at the end, I'm going to give you my opinion and my perspective on how to proceed moving forward. So with all that said, let's get right into it. So here we go. Here's a story from crypto.com that says hackers stole more than 30 million in Bitcoin and Ethereum. Now, if hackers can do this, it's going to bring negative sentiment towards the market because obviously the market's observing this and they need to know that their crypto is secure. That's one of the main reasons. You know, the crypto part, cryptography inside of cryptocurrency, is supposed to mean that it's more secure. And if hackers can hack into it, obviously that's taken away from that cryptography part. Now, let's talk about this. Crypto.com said Thursday that cyber criminals had breached its security systems earlier in the week and made off with more than 30 million in stolen Bitcoin and Ethereum. The cryptocurrency exchange Crypto.com, known for its viral commercial starring Matt Damon, as well as his recent $700 million deal to rename the Staples Centers in Los Angeles as Crypto.com Arena, said the hackers managed to bypass its two-factor authentication system and withdraw the funds from 483 customer accounts, according to a statement the Singapore-based crypto exchange posted Thursday on its corporate blog. Unauthorized withdrawals totaled 4,836.26 Ethereum, 443 Bitcoin, and approximately 66,000 in other currencies. That works out to around 15 million and 19 million, respectively, between Ethereum and Bitcoin, based on current exchange rates. All customers have been fully reimbursed for any lost funds as a result of the hack, Crypto.com said. So now you got to know that this company, Crypto.com, is a $1 billion company. They're more than $1 billion. The market cap is way up there. So if they're taking a loss of 15 and 19 million, they have cash on the side in order to replenish all these things that are lost. But obviously, it's not a good look, and it's going to bring negative sentiment down in the market. So that's something to keep in mind there. This is the next article I got is right here. New research expects a gloomy year for Bitcoin as DeFi and DAOs rise. So this one is for Bitcoin in particular. It's not a negative on the crypto market as a whole. This is more negative towards Bitcoin. Another major player in the cryptocurrency world is forecasting a dismal year for Bitcoin in 2022. Following the Federal Reserve's and other central banks' tightening of liquidity measures, Wholeboy Research believes that BTC will enter a bear market. On the brighter side, decentralized finance will continue to expand and adapt, with DAO governance eventually becoming a major driver of activity on the chain. Bitcoin and Ether price plummeted on Thursday night on cryptocurrency markets, shedding about 150 billion from the market. Over the last 24 hours, Bitcoin has lost roughly 7.9% of its value to as low as $38,788 at the time of writing. 2021 was a watershed year for crypto, with the industry growth reaching new heights. DeFi Non-fungible tokens, also known as NFTs, cryptocurrency adoption, blockchain usage, and other factions all had big years. Big So the whole blockchain technology has also been brought up to the forefront via Web3 and the metaverse. And for those who don't know what the metaverse is, it's something that's going to be coming to you in the next 5 to 10 years. Facebook's making a big push towards it. Microsoft just purchased Activision Blizzard, making a big push for it. Nvidia is working the chips for that. And it's basically a second life, where a place where you can go and explore things in a virtual reality or augmented reality, depending on where you're at. And cryptocurrencies are supposed to be native currencies in that. So expect that in the future. You already have one called Mana, which is part of Decentraland, which Decentraland is already sort of a metaverse on its own, although it's rather small. Regulators are also catching up, with 40 nations having established over 150 distinct rules for cryptocurrency, according to the Global Crypto Industry Overview and Trends. So one of the things not mentioned here, but Russia, they are talking about potentially banning either just Bitcoin or cryptocurrencies as a whole. So that's another net negative for the cryptocurrency market. Getting a little bit closer, cryptocurrencies tumble, with Bitcoin falling 7% and Ether down 8% just in the last 24 hours. But that's nothing new for cryptocurrencies. They always go up 7%, 6%, go down 8%, 7%. Like, that's something that's a norm. But it's come down from about $60,000 to now $38,000. It's the second time it's happened. So people are getting a little worried. They don't know if it's going to bounce back like it did before. So Bitcoin fell more than 7%. About 147 billion were wiped off the entire cryptocurrency market in the past 24 hours, according to data from coinmarketcap.com. It came from after Wall Street losses on Thursday, with the Nasdaq down almost 5% this week and the S&P 500 on its third week of straight losses. Bitcoin prices fell sharply on Thursday night, while other prices also dived, wiping off nearly 150 billion from the crypto market. Bitcoin fell about 7% in the last 24 hours, as low as 38,000, and that's not accurate. Maybe as this article it is, but it even fell below 38,000. So it's back over 38,000 right now. Ether, the second largest cryptocurrency, it was trading at $2,878, which is well off its highs. And it's about 147 billion wiped off the entire cryptocurrency market in the past 24 hours. Keep in mind that Ethereum almost reached that $5,000 level. The declines in cryptocurrencies follow Wall Street losses on Thursday. The Nasdaq was down almost 5% this week, and the S&P 500 is into its third week of straight losses. As the 10-year U.S. Treasury yield spiked earlier this week, rising rates have caused investors to shed their positions in riskier assets, and yields move to opposite prices. So let me take a second here, and let me sip on this coffee real quick before I talk to you. All right. So the 10-year yield, this is something that a lot of new investors are not really paying attention to, and they look at, and from what I've heard from young investors is that it's not really relevant anymore. It's a way that old timers used to track the way that the stock market was should be doing good or doing bad. And the reason they say that is because it was just one less thing they wanted to pay attention to. They would rather pay attention to things that are good, such as the greed and those type of indexes, like how much greed is out there, how much fear is out there. So you have the fear and greed index. So people pay attention to those. But the 10-year yield, the 2-year yield, and the way they are set up is a big thing to pay attention to, because they have predicted previous bear markets in years past. So right now, the 10-year is reached 1.85. And if it reaches that 2% level, even at 1.90, 1.80, that 10-year yield is going to make it so money is worth less, and the market cap of these companies is going to dramatically sink, because the amount that they could bring in is a lot less. So a lot of the times when the 10-year yield is lower, about 1.2, 1.3, you can take riskier bets, and the amount that you can put up, the price to earnings ratio that you can put on a company can be a lot higher, like Facebook, for example, which is in the 33 range, or Apple, which is in the 45 range. You can be a lot more optimistic on them and give them a lot more credit. However, one thing you can't do is when it's above that 1.8, 1.9, even if we reach that 2%, that 2.00 level on the 10-year yield, it's going to make it so stocks are a lot less attractive. Big cap tech stocks are not going to be as much. And then you have these companies that aren't even making profit yet. Those companies are going to become zombie companies. A great example of this is Peloton. They have been crushed. They are down a lot from their highs. You have a lot of stocks down like 80%, 90% from their highs that look like good companies, but it was just because we were taking into account a lot of small news and we would buy big. For example, let's say MP Materials. So Tesla says they're going to buy, $1 billion worth of mining assets. So all the miners go up. Even though uh, Elon Musk didn't specifically say a specific company, all the miners go up altogether because, it's bullish for that sector. But what ends up happening is it doesn't come to fruition. It doesn't happen to be MP Materials that gets that deal. And now 6 months down the road, all those profits you made, if you didn't sell, now you're underwater. And that's happening to a lot of people. ARK Invest is a big example of somewhere you could get burned. And I think they're down like 70% from their highs because their methodology is worth a lot less in an environment when a 10-year yield is that high. So that's just something to keep in mind. I just wanted to put that in a little perspective, but let's get right back into it. The Federal Reserve has also indicated it plans to begin reducing its balance sheet as well as tapering off of bonds and raising interest rates. A common investment case for Bitcoin is that it serves as a hedge against rising inflation as a result of government stimulus, but analysts are saying the risk is that a more hawkish Federal Reserve may take the wind out of Bitcoin sales. So they're taking the opposite look. As yields pulled back later in the weeks, however, foreign exchange trading firm Owanda's senior market analyst Edward Moya said it's a little disappointing to see Bitcoin reacting more positively to the reversal in treasury yields. Bitcoin prices have fallen sharply since November, tumbling more than 40% from a record high of about 69,000. So that's just taking a look at the crypto market a little bit right there. This is another article right here. Let's take a look and see what this says. Bitcoin falls beneath 40,000, dragging crypto economy below 2 trillion. That was the market cap at the time. And on Thursday evening around 10 p.m., the price of Bitcoin fell beneath 40,000 for the first time since September 21st, 2021. Bitcoin's 24-hour price range has been between 43,508 and 38,250 per unit at the time of that writing. Like I said earlier in this video, it fell beneath that $38,000 level. So here's a look at the chart. And just taking a look at this basic chart right here, you can see the lower lows. And that's not something that's very bullish. Although this is a shorter term stock, this is only going back to November. It's still something to keep in mind. Since that time frame, there has been lower lows and lower lows. And what happens is it fell here hard, right? And then you have the people that have this methodology of buy the dip, which is great. However, look what happens. You buy the dip here, and yes, it goes back up. You have a bullish, but this is called a false top. This is called a bear trap. You think it's going to keep going up because you have a sharp move back up to the upside. But what ends up happening, slowly, you hold on to it. I'm going to hold on for dear life. I'm going to hold on for dear life. And then little by little, it starts dropping. And then it starts dropping. Before you know it, you're below where you bought in. So now if you sell, you're going to sell for a loss. So you continue to hold. And you might even say, let me continue to buy. Let me continue to buy. This is called as catching a falling knife, trying to buy it as it continues to go down. You think it's reached the bottom, and then it goes lower, and then it goes lower, and then it goes lower. So keep in mind that Bitcoin can realistically head back down to a $20,000 level. Even a $3,000 level is not something far-fetched. The more fear that hits this index, the lower that these things are going to go. So just keep that in mind. The top trading pair with BTC on Friday is Tether with 51.80% six of all trades. Tether is followed by the US dollar with 21.75% and a stable coin BUSD with 7.71. The second largest crypto asset, Ethereum, is down 9.1% over the last 24 hours and 29.1% during the last month. Ethereum's 24-hour price range has been between $3,271 and $2,809 per unit, while Ethereum's dominance is 17.7. It represents 340.9 billion out of the 1.94 trillion crypto economy. The most dominant trading pairs with Ethereum on Friday include USDT, USD, BUSD, BTC, the Euro, and KRW. Out of all the 12,000 crypto assets in existence, only 5 coins are up in terms of weekly gains. You have Theta Fuel, you have FTX token, BitTorrent Old, Osmosis, and Ecomi still holding single-digit 7-day price increase compared to the rest of the crypto economy. So if you don't know about these cryptocurrencies right here, the Theta Fuel, FTX token, you have BitTorrent Old, Osmosis, and Ecomi. If you haven't heard of these, then take a look at them, because it's always good to take a look at stocks or cryptocurrencies that are down or up, are doing the opposite of what everything else is doing. So these 5 are actually up on the week, whereas all the other ones, the 11,995 are all down, and these 5 are up. So why is that? Even though they're only holding a single digit 7-day price increase, it's still a price increase compared to 7% decreases in some of the biggest cryptocurrencies. So taking a look at these, and then you want to stay away from some like these, because the biggest losers included Loopring, Pocket Network, Cadena, Harmony, and Near. Although Harmony is the token is one, that's the ticker symbol. That's one that has a large following behind it. So if it has fallen a lot this week, 25, 33%, Harmony would be one that I would take a look at. So just keep that in mind. So let's get out of here. Now let's take a look at some of the stocks. All right. So the NASDAQ Composite, it just logged its 66th correction since 1971. Here's what history happens to say will happen next in the stock market. So let's look at things in a historical fashion. Before we get too ahead of ourselves, what is a correction? So a correction is when the stock, either an individual stock or the entire stock market index, such as the S&P 500, the NASDAQ, so on and so forth. There's a lot of indexes. A cryptocurrency, it doesn't matter. If something is down 10%, it's considered to be in a correction, So the NASDAQ Composite 130, it was down 1.30 on Wednesday. It booked its first close in correction territory since March, with a rapid surge in treasury yields and expectations for interest rate hikes, which we talked about. The technology-heavy index is off to a terrible start, down 8.3 so far in 2022, closing Wednesday down 1.2% at 14,340 and 0.26%. That's at the time of this writing. Let me go back here, give you a more up-to-date. The NASDAQ is currently down to 14,716 as of right now, currently in the futures, because the market hasn't opened yet as of this video. Today is January 21st. We're in January 21st, 2022. The technology heavy index is off to a terrible start, putting it down 10.69% below its November 19th recent peak, meeting the common definition for a correction in an asset value. The benchmark finished below its 200-day moving average for the first time since April 2020 on Tuesday. The index has registered a correction 65 times, not including Wednesdays, since it was launched in 1971. And of those corrections, 24% of them, or 37% of them, have resulted in bear markets. A bear market is 20% or lower. So once a stock, anything like we talked about, once they hit from peak down to where they are, 20% or more, they are considered in a bear market. Decline of at least 20% from a recent peak. More recently, corrections have served as buying opportunities with the sojourn into correction territory on March 8th, resulting in the subsequent gains for the 1 week, 2 week, 3 week, and 1 month periods going all the way out to 6 months. A similar uptrend took hold when the NASDAQ composite slipped into correction territory in September of 2020. So let's go down here. Let's take a look at this chart. So what you're seeing here is the NASDAQ composite after closing in a correction, and then we're looking at the date. So this is going all the way back to 2007. So in 2007, it hits a correction. 1 week after that, it's up 3.9%. 2 weeks after that, 4.1. 3 weeks, 1 month, it's up 5.1%. Now, 3 months down the line, people buying the dip, buy the dip, buy the dip. But 3 months down the line, it turns out that it goes right back down. So it went up 3, 7, 11, 16%. Now it's down 10%, 4%, and then it finished the year down 46%. Keep that in mind. Now let's take a look at the most recent ones. So now in more recent history, you have the September 8th, 2020. You have February 27th, 2020. You have the 10/24, 2018. And this was when the Fed said they were going to raise interest rates. It dropped 10%, dropped 10%. And most recent history, except for February 27, 2020, when it fell 10%, it bounced back up. Now, in 2020, 2 weeks into it, it fell down 15.9%, fell 16.5%, down 12.24%, and it finished the year up 54%. Here, we finished the year up 40%. So let's look at the trends. Anytime that it was down, let's say 5 weeks, 5 weeks after, it's still only one time when it was down 5 weeks after did it finish in the green, and it was up 15.2% to finish the year. Now let's look at 4. 1, 2, 3, 4. So 4 times well, that one don't even count. 3 times in history after going down for the next 4 weeks did it finish up. Here it finished up 20% for the year. So you've had only 2 years where it finished down really ugly, in 2007 and 2008. And as we all know, that was the great financial crisis during those years. So it is to be expected. So keep that in mind. Put that in perspective. If it gets ugly, looking at recent history, the most recent corrections, will it be as ugly as before? So you got to think about where we are now and what's going on and what is it comparable to. And I say right now, not to be a bull, because I'm not, I'm a perma bear, but where rates are at right now, with the Fed saying there might be 3 to 4 rate hikes this year, and where interest rates are, and where inflation is at, with the amount of liquidity in the system being crushed, I could see us being closer to having this sort of a year, down 20%, 4.6%, than being up at the end of the year at 54%. This is not financial advice. This is just my estimated guess. I'm not a financial advisor. Just keep that in mind. That's what I'm looking at. Looking more broadly at the performance of the NASDAQ composite over the past 65 times, it has fallen 10% from a peak. It has finished positive, an average of 0.8% in the week after, but returns after that month are weak until a benchmark breaks through it in the 3-month period and beyond, where averages are 2.2%. So here we look at the average and the median, 1 week, 2 weeks, 3 weeks. And after 1 year, it's usually higher than it is lower. So just something to keep in mind. So with the policy meeting looming, the 10-year yield treasury note was trading at about 1.83. And I told you anything above that 1.8 level is dangerous territory for anything that's like big cap or things that don't really have a lot of earnings. Rising yields are weighing on yield-sensitive tech stocks and growth-themed areas of the market, as rapid rise in interest rates market their future cash flows less valuable, and in turn makes the popular stocks appear overvalued. And that is causing a broad recalibration of the tech and tech shares. So that's something to keep in mind. So let's get out of this. Before the stock markets opens today, I just want to look at some of the stocks making the biggest moves in the pre-market. So as of right now, we have Schlumberger, the oil field service company, rose 1%, nothing big there. But Netflix did plunge 19.4% because they said that a lot of the other streaming services are eating into their profits and their potential subscribers. Peloton, they went down yesterday 24% because a report came out saying that they were going to cease making bikes for 2 months and cease making treadmills for 6 months, or the opposite, one of those. And the CEO said this morning that that was a lie. He doesn't know where that came from. So it bounced back only 6.1%. You have CSX. They beat estimates by 1%, not much. They're up 1.4%. You have Intel, another big one. They announced plans to invest $20 billion in new manufacturing facilities outside of Columbus, Ohio. The plants will produce advanced semiconductors as chip makers accelerate efforts to meet growing demand. Rio Tinto, if you don't know what Rio Tinto is, they're a digital security company, cybersecurity. Rio Tinto, they lost 1.6% in the trade market after Serbia revoked the mining company's lithium exploration licenses. Then you have Under Armour. They're up 1.4%. They were upgraded from buy to buy from neutral, saying Under Armour is emerging from the pandemic in a very strong position in North America. So those are some of the big moves going on. So what does all mean? Let's put this all in perspective. Crypto is down. You have the stock market is down. How should you invest now? Right now is a wait and see period. Let's wait and see. You might have a day tomorrow, on Monday, Tuesday, Wednesday, when the stock market is up 4%, 5%, and those are the indexes. And you may have stocks that you like, individual stocks that are up 8%, 9%, 10%. Do not get that fear of missing out and go in there and buy all willy-nilly. That is not what you want to do in this environment. If you really like a stock, if you really think that a stock that you have is a winner, take a moment, sit back, relax, sip on whatever you like to sip on, whether it be coffee, tea, alcohol, whatever. Shout out to eToro. They sent me this cup right here for reaching $30,000 on their platform in one cryptocurrency. And, I'm part of this club now. This is a little dirty. I got to wash it, but shout out to them. So what you can look forward for me is I'm going to give you a list of stocks that I'm going to be looking at in the next video. And I'm going to give you a list of where I want to buy those stocks at. How am I going to do this? So for example, Uber, when the financial market crashed, the big crash 2020, when, 19 first came out, you had Uber that fell about 50% down to $16, $15. I think it even reached $12. I could pull up the chart, but I want to make realistic bets on these companies. All right. Even companies that I really like. And you got to be willing to miss out on one, because I could put an unrealistic downgrade on a stock. So let's say Uber is $35 now, and I'm not buying it unless it reaches $16. Well, that's really unrealistic. Or is it? I can stay firm with that. Whatever my number is, I'm going to stay firm with it. And if it never reaches that number and I never dive in, then it is what it is. You could even make a level approach. So it's $35 now. I could say when it hits $25, I'm going to dip my toes in. I'm going to get in there and I'm going to buy a little bit. When it reaches 20, I'll buy a little bit more. And if it ever goes under 15, I'm going to go in heavy on Uber because I really like Uber. I think it's going to be a part of the future and I'm going to buy it. So that's something, one way to do it. Now look at the stocks that you like. You might be, unfortunately, in AMC and GME, and you got to ask yourself, like, are these companies that are going to go back to these prices that I think they're going to go to? Do I want to buy AMC at 18? I personally don't. I go to AMC. I'm an AMC StubHub member. I love it. I love AMC as a customer. However, What I can't do is get emotional about that. So what I need to do is look at myself and put everything in perspective and try to figure out if it's worth it. Listen, 2019 or 20, before all these people bought AMC, I bought it. I bought it at $2. I bought 400 shares at $2. And this was before all this other stuff happened. Now, at a certain price, I had to sell because it wasn't realistic. I missed out on a lot of gains. I never knew it was going to go to $81 or something like that. So, did I miss out on a potential life-changing gains? Maybe, maybe not. But I can't make the future way that I invest based on that. There's been times where I have sold really early. I've sold really early on a lot of stocks, and it's bit me in the butt a few times, but I can't let the past affect the future because it may not play out the same way. And you got to be disciplined like that. It takes a lot of discipline. It takes a lot of discipline to see a stock that you like up and not want to buy it because you're like, I like that stock. It should be up. I want to buy more of that stock. But one thing we get into is that we hear a little bit of good news, or for example, this gaming company is about to release a new technology, part of a game, and then the stock goes up 26%. Is it really worth that 26%? Do you want to be buying in on that day? Chances are that 26% is not going to last, and it's going to go maybe down 10% from that. Then you could start buying if you really think that news was worth that. But you just got to have a little discipline. Thank you for joining me. If you stayed in this long, if you like this type of content, like, comment, subscribe, and stay tuned because I'm going to be bringing you a lot more content. And I really appreciate every single one of you that drops comments down below and you like the videos and you send me emails, all that. I appreciate all of it. All right. I'm here for you. I know that you guys are here for me as well. So just hit that subscribe button. It doesn't cost you anything. All right. Until next time.